So you're talking you could rip, $20 out of the fat cattle in 2 days.
Hi, everybody. Welcome back to the Commstock channel. I'm Marlin Bohling with you, and I am joined today by Relph, a market analyst and broker with Commstock Investments. We're going to summarize a very short trading week. Of course, Monday was a holiday for Memorial Day, so we compacted a lot of action into 4 trading days. Eric, as I look at the close here on the grains, in every commodity that I have been watching, it wasn't a good weekly close.
No, it wasn't. And we can point to a lot of things for that pressure. I think the most prevalent right now is the weather. Everything looks to be overall cooperative. You can look at the EU model or the GFS model, or now we're getting influence from AI models. And no matter which one you look at, you can see areas getting ample rainfall. Some kind of differentiate a little bit between east and west, where the EU has the east wetter, the west drier, and vice versa in the GFS. And so you can kind of go back and forth, but at no point do any of them look overly threatening. Now, if you talk to producers in northern, especially northwest Kansas and most of the state of Nebraska, they would definitely disagree with you. But all in all, on a national level, it looks like a fairly non-threatening forecast. Pretty widespread rains coming through in the 10 to 15 day models, at least for now, and just no real problem there. So I guess I was a little bit wrong. I thought we probably had almost zero weather premium in the market at the prices we were trading a week ago. And then we start stripping some out as the weather looks to be less threatening moving forward. So that's probably a big one. Another is, how much is this outside influence regarding tariffs and overall budget crisis, the bond market, all of this stuff is factoring in. And you would think that with the anticipation of increased inflation, there would be money flowing into commodities. And that doesn't seem to be the case. It almost feels like the commodity sector as a whole is in a deflationary mode, where it becomes risk off in commodities, and you're starting to see equity markets challenge recent highs and things of that nature, which would make you feel the same way. So a little bit tough to figure out here, but all in all, I think it's overall economic worry combined with a pretty good start to the growing season here.
Isn't it kind of odd for the funds to be loaded up on the short side of the boat at this point in the year?
This time of year, it's very odd to see the funds holding the kind of short position they are in both corn and soybeans. And that's just been a short position for them for a long time. It's worked for them, and they're going to continue to probably beat that drum until it doesn't work for them. But in the row crops in the month of June, for the funds to be headed in as short as they are and not having any premium to crop insurance during the month of May is almost unheard of. It doesn't happen very often. This was one of those years where it did happen. So are we going to see some contra-seasonal rally after the 4th of July when we would normally fall under pressure? Those things could happen. We saw that in 2020. We got past the 4th of July, the market stabilized. Everybody still at that point was wondering if we were going to go to the gutter. And then once we started the rally in August, we just never stopped. That kind of thing could happen, but it's going to take weather to get us there. And that's a little too forward looking at this point.
I'm looking at a July corn chart, and it appears on a daily chart like it just seems intent on retesting long-term lows again.
So yeah, we'll just take a look at it. But you're absolutely right. It seems intent on testing lows. We're not too far away right now. That July made its low for the move on the 13th of May at 436.5. We're 7.5 cents away, 7 cents away right now, as we're coming into the close for the week. And terrible finish to the week. We started out up here in the 60s and falling down to the 40s in the July. Could it go another 6-7 cents and test that low? Absolutely. The big deal is going to be whether or not we can hold there. And right now, like you said, it seems intent on making new lows. So I'm not going to say either way, but it's probably going to take some kind of shift in the weather pattern to make that happen. But it is kind of remarkable also to note that right now, with the July struggling like it is, basis levels nationwide are really firm. We're seeing really good cash offers all over the country, while the board is just struggling. And those basis numbers continue to kind of compensate for losses in the board this week. So not really giving up anything on the cash side of things.
If you zoom back out, I believe further back, if you go a few months back, I believe there are maybe 2 or 3 lows below where we are right now.
Yeah, I mean, there's a sequence of lows when you go back to last fall. The most recent of those being in the November December timeframe at 36 and three quarter, 37 in that area. Then you have a spike low that was in October at 427 and a half. I mean, any of that could be, if we take out that mid 30s level, any of those could kind of come into focus. And hopefully, we're not going to go back to $4, but anything is possible, obviously.
Now, do soybeans look anything like the corn on a daily bar chart if you look at historical charts?
No, soybeans look quite different, actually. Today is the first day that we've sustained a day of trading below the 100-day moving average in the July soybeans for quite some time. I mean, you have to go back to April 10th was the last time we traded a full day below that 100-day moving average. So they've been working slowly higher and continuing to test that 100-day along the way. And now we've got a little breakdown to the bottom side. Now, could we see a bounce back? Absolutely. What's it going to take? Most likely is some news out of Washington, because the soybean oil has been the plaguing factor here today, or this week. I mean, today was no exception. We traded to $2 lower, currently $1.64 lower, with about 45 minutes left to trade here. We did test the 100-day moving average in the July bean oil, but this is just very impatiently waiting on 45Z guidance, the renewable fuel legislation out of Washington, and we just can't seem to get anything going.
And as you mentioned earlier, now that we're approaching harvest time, the wheat just can't seem to find a friend.
No, and we have actually in the spring wheat been able to actually put together a decent little week, and initial ratings for the spring wheat came out on Monday or on Tuesday because of the holiday. So Tuesday afternoon, we got the initial ratings for the spring wheat crop, and only 45% good to excellent. That's tied for the worst in about 30 years on that initial condition rating. And you can see the strength that we've seen here over the last couple of weeks in the spring wheat after coming off the low, and just can't do anything to help out the winter wheat at the same time. You look at July, Kansas City just up 1.5 today, while the spring wheat's up 8 3/4. And yes, we had a nice rally a couple of weeks ago, but then kind of faded off since then and been grinding sideways. Wheat can't seem to keep a rally going to save its life. And I think it does get spread off against the row crops, but when they're short everything, that doesn't really hold water either. So it's just tough to figure right now what's going to make this wheat move. And I keep making the quality argument. That's why the conditions on the spring wheat are so bad. They've had too much rain up there, and much of the HRW growing region's been the same situation. That obviously there's pockets of people who would say it's dry as hell here, and they're absolutely right. But there has been a lot of areas receiving a lot of rain compared to a normal year, and that always does create some quality concerns.
Now, there is a caveat to that, though. Just on our company conference call we had a couple of days ago, we were talking about all the wildfires going on, I believe, in Alberta, Canada right now. And there is ultimately dry conditions and smoky conditions. Their canola market is going crazy too. Of course, it has to do with China, but I mean, things are not all that great up there.
Yeah, and that's propelled the oats too. I mean, the oats have traded something like 27 or 28 cents higher in the last 2 weeks, being pushed by the same thing. I mean, Canada's a major oat grower. They're critical to our domestic oat market as well, and so you're seeing some of these things take place. And what's remarkable is the soybean oil is just getting beat down while canola is flying high. It's pretty remarkable when you look at the difference in usages and the fact that the market is so micro focused on biofuels.
Well, I want to flip the script here and talk with you about livestock as we headed into the end of the month. As you mentioned, we're recording this during the trading session before the close, but cattle have had an interesting ride here. They didn't do a whole lot on Friday. Hogs seem to take over on Friday. But there's some kind of unsettling news here in this cattle market, isn't there?
For sure. And you're seeing trader jitters as a result. I mean, Tuesday morning at about 7:30, the article came out that there was New World Screwworm detected in Missouri. And the spoof of it supposedly is there was a post that looked official from the USDA. I saw it early that morning, and it looked real. It looked legitimate. That was getting circulated a little bit. That was picked up by a radio station in Trenton, Missouri, and then it kind of caught fire. And this was happening just after the open on Tuesday, which was the start of our week this week. And in a flash, we were trading 7.25, 7.5 lower in the feeder cattle, $3.50 to $4 lower in the fat cattle. And it looked like we're headed for a limit and nothing's going to change it. Well, in the midst of that happening, the article was taken down off of the KTTN website out of Trenton, Missouri. And the USDA had put out a statement that it was false news. There was nothing to substantiate that, that kind of thing. And so we come back, we finish about $2 lower. Then Wednesday, we trade about $2.50 lower again in the feeder cattle. Fat cattle keeping about 50% pace with whatever the feeders were doing. So, they lose $1 the first day, $1.25, $1.50 the second day. Then on Thursday, everything rallied. It was like the trade was convinced that was all fake. And then we started getting some really hot cash news in the fed cattle arena. Things were really moving higher, especially after about the 11 a.m. time frame. We got the morning reporting out. It was fairly quiet. And then after that, things just broke loose on Thursday. So you had this perfect recipe of higher equities, lower grains, lower dollar. Now all of a sudden you're getting higher cash along with higher beef each day this week. And then the cattle exploded. And you saw $4.50 gains in the feeder cattle, $2.50 gains in the fat cattle. And that was on Thursday. Now today on Friday, we open up, we go up even higher yet, make a new high for the move, close the gap on the feeder cattle, while the fat cattle at the time were running about $1.50 higher. And we've got cash trade that warrants the fat cattle moving higher. So no big surprise there. But then what was surprising was after we closed that gap, we traded through it in the August contract by about $1 and then faded off into negative territory almost immediately after. So I think you've got enough market angst about this situation because they saw a glimpse into their future. If we do get confirmed screwworm cases in the U.S., what this thing could do to the market. And then just to add a little more fuel to that fire, our limits are going to be larger starting next week in both feeder and live cattle futures. So we will go to 7.25 limit on live cattle and 9.25 limit on feeder cattle for day one limits. If we hit limit, then we'll go to 150% of that for the expanded limits. So you're talking, you could rip, $20 out of the fat cattle in 2 days.
Okay. Yeah, that's an odd confluence of things taking place. And then, of course, just for good measure, this happens to be the end of a trading month. And sometimes that can lead to people maybe bailing out of positions right before the end of the month to make their profits look as good as possible on the books. Do you think the trade may have been totally different if it wasn't the end of the month here on Friday?
I really don't think so. I had kind of thought before yesterday's trade started, I had made the comment to a couple of people within the company and a couple of clients that this was set up to where we could see a nice little recovery going in towards the end of the week and give probably some opportunity to get some additional hedging done at the gap levels, or maybe even slightly above if we could sustain that trade a little bit. So we did close the gaps and we were able to make that happen. But my warning was, if that happens, that seems like too perfect a setup for news to break over the weekend, and it makes me nervous because we see that happen so often in various things. Whether it's a war in the Middle East or an explosion in the Gulf or whatever the case may be, these things seem to always happen on the weekends when you just sit and wonder what's Sunday night going to look like, or in the case of the livestock, what's Monday morning going to look like. And so I kind of left the warning out there that if we do get up there and we're looking to protect anything, we need to get that protection put on. And we did get up there. We did get some of that protection put on. I hope that the headlines don't break over the weekend, that we've got something major going on in the U.S. at this point, and everything will be null and void. But this cash trade that we've got on the fed cattle side can offset some of these jitters, because we're trading 234, 235 live in the north, 370 dressed in Iowa and Nebraska. The Southern Plains struggling to keep up, but we did see some as high as 225.5 on the Fed Cattle Exchange yesterday. So really salty prices. Luckily, people were able to take advantage of that this week and sell cattle at the highest price they've ever sold them. and the volumes indicate that a lot of people took advantage of that, and they did get some buying with time done. Whether they take advantage of that time or not will remain to be seen. But a lot of these cattle were bought for the week of the 16th of June.
So there's two ways to look at this, and it could be extreme either way. I mean, if this turns into a big story, I guess it would be ultimately bearish if the consumer backs away from the product, right? With fear of the safety of the product.
Right.
On the other hand, we're already at a record short supply, and it's going to make it even shorter. I mean, that would be extremely bullish, wouldn't it? I mean, who's going to take control?
Yeah, and who knows what the mitigating factors are going to be if this does get to the U.S. and we do have a rampant outbreak of some sort. Then how are they going to mitigate that, and what does that mean for food safety and more importantly, like you said, consumer sentiment? I think the vast majority of retail meat buyers don't understand the industry. They don't understand the dynamics of any of these diseases. So if it's something that does hit the U.S. and then gets sensationalized by mass media, then we've probably got a major problem for product demand for a while.
Oh, it just brings back bad memories of BSE on Christmas Day.
Yeah, that was the exact same thing. I remember when that happened, people lined up trying to get something done, and there was nothing we could do.
Yeah, right. And then you had limit moves for like 3 days. And
Yep.
Oh, man. Okay, so that's interesting. I did want to touch on the hogs. They actually had a pretty good finish here on Friday to wrap up the week and the month. What do you think of that?
Really nice looking chart. That's one worth taking a peek at here. But the technicals look good. The fundamentals sound good. If everything comes to fruition like what we're hearing, this market could have a little room to run yet. Taking a look at the June, up $1 here coming into the finish line at 101.02. That's the first if we can hold to the close. That'd be the first close above 101 that we've had since April 25th, so just over a month. And that would probably open the door to more buying come next week, and we might run a challenge of these highs. And definitely this gap is something we've been watching in that June contract at the 105.5 area.
Is movement like that, is that typical in June?
It's not overly surprising to see June start to carry some really nice premium. It is a little surprising to see it start this early. You might see a burst in June, and July's really taking the headlines away, right? And to an extent, July's doing that anyway. We're trading at 104.72 right now in the July, and up $1.75 versus the dollar in the June. So it is a little bit surprising to see the June have that kind of strength right now. Normally, you wouldn't see it until you got into that June, nearing the end of the June contract, so that June 10th to 14th timeframe.
Well, let me go back to this cattle discussion that we had a moment ago. That brings up an important point, and maybe the timing is excellent on this. I want to do a little shameless plug because I actually just recorded an episode that's going to air next Monday on this Commstock channel. And it's related to the New World screwworm and the potential threats and what to watch out for and what they're doing about it, and just possibly how much it could theoretically spread. You might be amazed at the information. I was kind of shocked when I did the interview. So I want to recommend everybody out there that's concerned about this, check out Monday's podcast on the Commstock channel on YouTube and other social media platforms, because we'll cover it in great detail and talk about the reality of the New World screwworm and how it's advancing northward and why and what to do about it. But that'll be coming out Monday. And then I'll have some radio clips from that will air on our radio affiliates as well, Tuesday and Wednesday of next week. And it should be very important information. It could have a big bearing on what happens here in the market. And I give you kudos for maybe getting ahead of the curve here on this and calling attention to it. I appreciate that.
Well, I hope your timing's not prophetic, so we'll see what happens come next week.
That wasn't the intent, but it may all be coming together here. So I'm glad you called attention to it here, and thanks for giving us an update. before the end of the week here. Thanks for talking with us. I know the
Yeah.
markets are still trading while we're doing this, but important information. And I hope you have a good weekend.
Yep.
Um, we'll talk again here soon. I'll have some other episodes coming up next week as well. For producer Brianne Jenkins, I want to thank you for joining us today. I really appreciate that. And we'll catch you next time right here on the Commstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.